Well, since we're talking about the biggest stock, which was HDFC Bank, right? It came as a bit of a shocker, the kind of, earnings that HDFC Bank put out and all the volatility in the stock. But Nigel has done some work for us on that. Nigel, over to you.
Well, let me hop across to the wall and, explain this to you all. The stock of the week clearly was HDFC Bank. That big boy was an underperformer. It went down close to around 10% in the week itself. And it's just 1% away from its 52-week low. Now, what was the street concerned about? Deposit mobilization. That's the worry. Loan growth was fine at close to around 5% on a quarter-quarter basis. The problem is deposit growth was only around 2%. And that's what got the street a little bit worried out there. Now, the NIMs that they came in with were around 3.4% on a sequential basis, which was par for the course, right? The problem is that the LCR has come down from around 120% all the way to around 110% on. So basically, they've deployed the excess liquidity to make up for, the lack of deposits out there. And that's how they've managed to maintain their NIMs. The street is fearing that if deposit mobilization doesn't pick up, that's what could put that margin number as well at risk. So that's a big concern out there. Even in terms of branch addition, well, it's been far from good. In this year so far, it's been much lower in comparison to last year. Though in Q4 as well as the first quarter of next year, they're guiding for nearly around 500 branches open out. You'll see that deposits will pick up. No, that will flow with a lag effect. So deposit mobilization from this as well will take some bit of time. What do you track from here on then? Uptick in retail deposit mobilization, that's going to be very, very important. Obviously, it'll have its impact on NIMs as well. And they're in a bit of a conundrum. Growth versus NIMs. I was, talking to one sell-side analyst, and he was suggesting that maybe they don't grow in mid-teens. Maybe they'll grow in low teens, but focus on NIMs. In the near term, and focus on replacing the high-cost liabilities of HDFC Limited that they have taken on their books. So maybe that is one view out there. So how does the stock price, shape up as of now? It ended close to around 1,475 out here. The subsidies, they account for close to around 230, 250 rupees per share. So the core business is valued at around 1,250. And the EPS that the street is working with for this year, it was at around 102. It's been scaled back to around 97 odd. Say even if they do 95, it's still trading at sub 13 times on an EPS basis. The problem is that there's a huge institution holding out there, and there is some fund selling that's evident on the screen. But is the downside limited from here? Well, time will tell on that one. Andrew, I just wanted you to come in on this one. HDFC, you just gave us a brief idea out there. But what do you think? Do you think downside is limited on HDFC Bank at these prices, at this kind of earnings growth, and give and take everything?
So I think there's a couple of points here. Is what is, are they going to chase higher deposits and then therefore pay higher rates? And that's kind of a race to the bottom in terms of NIMs for everybody. So that's one question mark. Two is that, we're going to have to wait a whole quarter to get this answer. So there's no real catalyst, for the share price in the very short term. And I think for foreign investors, this has been the bellwether of India in terms of growth, in terms of stability, in terms of, the economy and the banking sector. So that's why you saw so much selling by FIIs or FBIs in the past few days. So until that narrative changes, or the kind of, as you kind of pointed out, the NIMs start to kind of improve, no one's going to take that bet anymore. That things are going to be okay in the very short term. So I think one more quarter will have to wait.
Thank you for watching CNBC TV 18. For all the latest news and updates, do follow us on our social media platforms.